Want to start your journey in real estate, but feel overwhelmed? What if I told you there are secrets even experienced investors wish they knew when they first started? Stick around because today I'm revealing the crucial tips and tricks that could change your entire approach to real estate investing. Hey everyone, welcome back to the channel. If you're new here, don't forget to hit that subscribe button, because today we're diving into something super exciting. Real estate secrets that beginners wish they knew before starting. Whether you're looking to buy your first home or start investing in rental properties, you're in the right place. These tips could be the game changer you've been searching for. Let's jump right in. 1. Start with the right mindset. First off, mindset is everything when it comes to real estate. It's easy to get caught up in the excitement of making money, but you need to approach it with patience and long-term thinking. Real estate isn't a get-rich-quick scheme. It's about building wealth over time. So, focus on learning and growing your skills first. Trust me, having the right mindset will save you from making rash decisions and regretting them later. 2. Understand your market here is a big one. Location, location, location. A property in one area can appreciate in value, while another in the same city might not. Do your homework, research the market before you even think about buying. Learn about the neighborhood trends, job growth, schools, and amenities. The more you know, the smarter your investment will be. If you're planning to rent, consider how easy it will be to find tenants in that area. 3. Leverage other people's money OPM. Did you know you don't need a ton of cash to get started? The secret here is OPM, or other people's money. You can use financing options like mortgages or even find private lenders who are willing to end your deal. The key is to use other people's money to help grow your portfolio and not put all your personal funds at risk. But remember, always calculate the risks before you dive into anything, for start small and scale up. Don't try to buy the biggest, most expensive property right away. A starter property like a duplex or a small single-family home is a great way to get your feet wet without risking too much. Start small and focus on learning as much as possible. Once you get the hang of it, you can start scaling up. The best investors didn't become successful overnight. They built their portfolio slowly but surely. 5. Don't overlook the power of networking. Real estate isn't just about buying and selling properties. It's also about building relationships. You'll want to network with agents, contractors, lenders, and other investors. The more people you know, the better opportunities will come your way. Plus, having a reliable team around you can help you avoid costly mistakes. So, get out there, attend local meetups, and join online communities. 6. The importance of cash flow now. Here's a big one for you. Cash flow is king. If you're buying rental properties, make sure the property generates enough monthly income to cover expenses and give you a profit. Don't get stuck in the trap of only thinking about appreciation. You want a property that will put money in your pocket every month. So, always check your potential cash flow before making an investment. 7. Learn about tax benefits. Real estate comes with amazing tax benefits. As a property owner or investor, you can deduct certain expenses like property management fees, repairs, and even mortgage interest. Talk to a tax professional who specializes in real estate to maximize these benefits. Understanding taxes is crucial because it can save you a ton of money in the long run. Thinking about starting your own real estate business in 2025. Imagine being your own boss, securing financial freedom, and tapping into one of the world's most lucrative industries. But where do you even start? Stick around to find out the step-by-step guide to building a thriving real estate empire from the ground up. 1. Understanding the real estate business. First things first, before you jump into the world of real estate, you need to understand what you're getting into. Real estate is not just about buying and selling homes. It's about providing solutions, whether it's helping people find their dream homes or assisting investors in making profitable decisions. In 2025, real estate isn't just about traditional properties. There's also a growing market for rental properties, vacation homes, commercial properties, and more. The market is becoming tech-driven, so having an understanding of how to use tools and platforms like Zillow, Redfin, or even social media for marketing can give you a huge edge. 2. Get educated and learn the basics. You don't need a degree in real estate to get started, but you do need to educate yourself. Start by learning the basics, terms, contracts, legalities, financing options, and marketing strategies. Online courses. There are plenty of online courses and certification programs to get your foot in the door. For example, check out platforms like Udemy, Coursera, or even local real estate schools. Networking. Attend local real estate meetups or seminars. Networking with other real estate professionals is one of the best ways to learn the ropes and stay updated with industry trends. Remember, knowledge is power in this business, and staying up to date will help you make smarter decisions. 3. Create a solid business plan. If you're serious about building a successful real estate business, you need to start with a business plan. This plan should outline your goals, target market, budget, and marketing strategy. Here's what you should consider in your plan. Niche. Are you going to focus on residential properties, commercial spaces, or even short-term vacation rentals? Target audience. Who are you selling or renting to? Is your target audience first-time home buyers, investors, or businesses? Financials. How much capital will you need to get started? What are your projected expenses? This will help you secure funding or loans if needed. Having a clear plan will keep you focused and make sure you're headed in the right direction. 4. Build a network of experts. One thing you'll quickly realize is that you can't do everything alone. A successful real estate business depends on having a strong network of people to rely on. Here's who you'll need. Real estate agents. If you're focusing on sales, having a network of experienced agents is key. Lawyers. Real estate involves lots of contracts, and a good lawyer can protect you from potential issues. Mortgage brokers are bankers. Building relationships with mortgage brokers will help your clients get the best financing deals. Contractors. Inspectors. Having reliable contractors and inspectors is essential for properties that need repairs or evaluations. These people will not only help you grow your business, but they can also send leads your way. 5. Marketing your business. Now that you have the knowledge and network in place, it's time to start marketing your real estate business. In 2025, digital marketing is absolutely essential, so let's go over some effective strategies. Social media marketing. Platforms like Instagram, Facebook, and TikTok are great ways to showcase properties, share client testimonials, and engage with potential buyers. Website and SEO. Having a website is crucial. Make sure your website is professional, mobile-friendly, and optimized for search engines SEO. You want people to find you when they search for real estate services in your area. Email marketing. Build an email list and stay in touch with potential leads by sending valuable content, property listings, and updates. Virtual tour. Use virtual tour technology to show properties remotely. This is a big advantage for reaching clients who may not be able to visit in person. Effective marketing is what will get you noticed in a competitive market. 6. Understanding financing and making deals. A huge part of real estate is financing. In 2025, there are many ways to finance your deals, whether it's through traditional loans, private lenders, or creative financing strategies like seller financing or lease options. Start by building a strong relationship with lenders. The better your financial reputation, the better deals you can secure. Additionally, knowing how to structure a deal like negotiating terms and understanding contracts can make or break your success. 7. Stay consistent and adapt. Real estate is a marathon, not a sprint. There will be ups and downs, but consistency is key. Keep learning, adapt to market changes, and always provide value to your clients. In 2025, technology is constantly evolving, so be ready to incorporate new tools and strategies. Stay ahead of the curve to make sure your business keeps growing. 1. What is investing? Before we start talking about strategies, let's quickly understand what investing is. Simply put, investing is the act of putting your money into things like stocks, bonds, real estate, or businesses with the expectation that it will grow over time. Instead of keeping your money in a savings account, you use it to make more money. Here's an example. Let's say you buy 100 shares of a company. Over time, if that company grows and becomes more valuable, the price of those shares can go up and you make a profit by selling them. That's the basic idea, too. Why should you invest? So, why should you invest instead of just saving? It's all about growing your money. Inflation, which is when prices of goods and services increase over time, can eat away at the value of your savings. If you leave your money in a savings account, it might not grow enough to keep up with inflation. Investing, on the other hand, helps you beat inflation and grow your wealth over time. It's how millionaires and even regular people build their financial security. 3. Types of investments you can make. Now that we know why investing is important, let's talk about the different options you have as a beginner. Stocks. When you buy stocks, you're buying a piece of a company. If the company does well, you benefit. If not, you might lose money. Stocks are great for long-term growth. Bonds. Bonds are like loans you give to companies or governments. They pay you back with interest over time. Bonds are less risky than stocks, but also offer lower returns. Mutual funds and ETFs. These are collections of stocks, bonds, and other assets. They're like investing in a basket of different investments, which helps to spread risk. They're great for beginners because they're diversified, meaning you're not putting all your money in one place. Real estate. If you want to invest in property, real estate is another option. You can earn money through property appreciation, value going up, or rental income. Cryptocurrency. Cryptocurrencies like Bitcoin are a newer form of investment. While they can offer high rewards, they're also highly volatile. It's a riskier choice, so make sure you understand it well before diving in. 4. Where to start? Okay, now you know your options, so where do you begin? Start with a plan. You don't need a huge amount of money to begin investing. In fact, you can start with just $50 or $100. Decide how much you're comfortable with investing and stick to it. Choose a brokerage. A brokerage is where you go to buy and sell investments. Some popular platforms for beginners include Robinhood, Trade, and Fidelity. These platforms are easy to use and don't have a lot of fees. Start with ETFs or index funds. If you're unsure about picking individual stocks, start with exchange-traded funds, ETFs, or index funds. They automatically diversify your investments, so you're not putting all your eggs in one basket. Stay consistent. One of the keys to investing is consistency. 5. Risk and reward. It's important to remember that every investment carries some risk. The higher the potential reward, the higher the risk. That means you could lose some or all of your money, but don't let this scare you. It's important to have a well-thought-out plan. Start small and not panic when things go up and down. 6. Tips for success. Do your research. Don't invest in something just because you heard about it. Take time to research the companies, funds, or investments you're interested in. Invest for the long term. The best investors don't panic and sell during market downturns. They stay invested, knowing that over time, the market tends to rise. Diversify. Spread your investments across different assets to reduce risk. Avoid timing the market. Don't try to predict when the market will go up or down. Stay consistent, and over time, you'll be ahead. Now that you have a better understanding of how to invest, it's time to take action. Start small, be consistent, and keep learning. Remember, investing is a marathon, not a sprint. Stick with it, and you could see your money grow over time. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you don't miss out on more helpful tips. Have any questions about investing? Drop them in the comments below. I'd love to hear from you.